Amazon.com wants to sell you a Comcast cable package. We want to know what we've done to deserve this on this consumer goods edition of Industry Focus. Greetings, fools. Sean Riley here at Fool Headquarters in Alexandria, Virginia. It is Tuesday, March 22nd, 2016, and joining me in studio is the incomparable Vincent Shen. How was your weekend?
Pretty good. I was actually, again, at one of those cabins out in Shenandoah, enjoying nature, hit with a little snow, actually.
I'm surprised you're this much of a camper, because this isn't the first time.
No, absolutely not. I like it going out there, chop some firewood, enjoy the very nice views, wake up to see the sunrise, probably for the first time.
Wear flannel shirts, which, for those of you that are listening that can't see Vincent right now, he is wearing a flannel shirt.
A very comfortable one at that.
All right, fine. Well, I'm glad you had a good weekend.
How about you?
What did I do? I just kind of read and hung out, and I'm all caught up on House of Cards. I didn't watch much TV, and I was kind of planning on it because it wasn't the nicest of weekends. So it was pretty much
it was season. Well, I guess it was as cold as it should be,
right.
But it seemed kind of out of place considering the warm weather we've had.
We had the teas there, so
sure.
All right, so diving into the consumer goods news of the week. I don't want to call them shenanigans, but what's going on with Under Armour in this here stock split?
Sure. So this news has been going through developments, so to speak, for the past 6 months or so. So keep in mind that Under Armour originally announced plans for a stock split. It was last June. The delay happened due to a class action lawsuit that was filed by some shareholders due to the way that they had structured the split. So to give you more of that background, currently there exists two classes of shares, Class A and Class B. There's about 183 million shares outstanding for Class A and about 34.45 million of the Class B. What makes them different? Class A shares, you get 1 vote per share. Class B, you get 10 votes per share. The Class B shares, not surprisingly, are all owned by CEO and founder Kevin Plank and his family. And a big part of that in the way it is set up that way is because Plank wants to maintain control of the company that he founded.
Right.
And it is understandable. This is not uncommon among companies where you had like this one guy really leading the vision and who has undoubtedly taken this company to a level of success that is just truly incredible. So the company has gone through previous stock splits. So I think it was, let me find the dates here. In July 2012 and April 2014, they actually did a traditional split where for every share, Class A share, Class B share you were getting one additional. Standard 2-for-1 stock split done.
Yeah.
This one is unique in that for every Class A and B share you own, you're getting a new Class C shares. One share of Class C, and these Class C shares have no voting rights. And the idea behind this, and the reason why it was controversial and why there was this class action suit filed, is just because it kind of solidifies the control that Plank has in terms of those voting rights, and it allows him to sell some of his holdings without diluting that.
I'm kind of surprised he's that paranoid about losing control. I mean, it's to my knowledge, there's never been an assault on his leadership. I mean, the company's doing extremely well. So,
well, just to give you an idea, based on those numbers, right now, those voting rights were a core issue. And the thing is, he had controlled about 2/3. I think it's about 66% of the voting rights due to his Class B shares, and that gives him the power to board of directors. And a lot of other like the governance issues,
right.
And that's obviously important to him. So, as I mentioned, Plank can sell some of his holdings now through those Class C shares that he receives, and not worry about losing some of that control of the voting rights.
Yeah.
And the class action lawsuit was filed, and they've kind of gone through some iterations and basically come to this agreement to allow the split to still take place. So the key terms.
So he won. I mean, bottom line.
Yes, but there were some stipulations that came out. So, for example, there's a special dividend that's going to Class C shareholders because the fact is, you have your Class A shares trading under the ticker symbol UA. These Class C shares are going to trade separately under UA.C. And it's expected that they're, because they don't have voting rights, they're going to, some of that value.
A little bit of a discount.
There's going to be a discount. And so there is going to be a one-time special dividend to Class C shareholders in the amount of $59 million to kind of compensate for that potential discount. There's also going to be there's basically a strengthening of some of the non-compete clause with the CEO, that he has to, basically he has to devote enough time to his role as a CEO. And this is on top of the fact that, if he ever left the company, for example, he can't join any business ventures.
He can't go work at Nike.
That would compete for about 5 years.
Okay.
And then also, if there's any major transactions that involve the issuance of Class C shares as, potential compensation for an M&A deal, for example, the board of directors has to go through a special review to see how that will impact Class A shareholders and also the company overall. So basically, it's like a watchdog system to make sure that, there's nothing that with the issuance of the Class C shares, some of these other shareholders besides Plank aren't losing out in some way.
So what do you think he's thinking? Because a lot of other big business minds that owned large percentages of the corporations they founded, cough, cough, Bill Gates.
Well, in terms of,
he only owned, I think at his peak, he owned 28. Don't quote me, folks. Percent
in terms
of Microsoft.
in terms of Plank's actual ownership, I think it comes around 15, 16%. But this is the voting rights. He has very concentrated,
enormously large control. Yeah, it's just Bill Gates had been selling his stake in Microsoft. He stepped down from a full-time role in I think 2008 or 7 or something. But he'd been selling millions of shares every quarter for 10 years before that, and he didn't seem to worry about.
There's even stipulations here in terms of Plank's selling of his holdings. There's basically these amounts, these set thresholds, where, for example, if he were to sell about 2.5 million Class A or C shares in a single year, then all those Class B shares convert automatically to Class A. So basically,
he's trapped, even though.
So it kind of controls how much he can sell per year, and that kind of keeps him tied. Obviously.
Do you think, basically to the heart of my question, do you think he's being OCD about having voting control? Like, does he not trust? You know what I mean?
I think on the one hand, a lot of the controversy came about from the fact that the company announced it and basically characterized it as a straight 2-for-1 stock split like it's done previously, but that's obviously not the case.
Right.
These Class C shares have less value without those voting rights.
Right.
And obviously that led to the lawsuit and the settlement that they've come to, or this agreement that they've come to. But I can understand. I haven't started a company like this, and
right.
On the one hand, if you're a shareholder and you're looking at this situation, the split ultimately doesn't really change your thesis on the stock.
Yeah. So moving on, what does this mean if I'm a shareholder right now?
Yeah. So eventually the Class C shareholders, they should be cognizant of the fact that the company has made its intentions clear that with stock-based compensation, equity issued in M&A transactions or in partnership deals, that's going to come from the Class C.
Okay.
So there's that basic potential for dilution is going to be there. And otherwise, if you're a long-term Under Armour investor, you already generally agree with how Plank's been running the business. Like, keep in mind, this is a company where its revenue, its top-line growth has been unbelievable. It quadrupled from about $1 billion to $4 billion over the past 5 years. Unbelievable growth. The management, the brand power, overall, if you're buying into a company that's trading at 64 times its expected 2016 earnings, and that's after the stock has fallen 20% from its highs last year, you basically buy into the vision that Plank's had, this steady expansion. He's guided the company with a pretty steady hand.
Mm-hmm.
And, the split does little to change that story, whether or not you agree with the way that he's going about the stock split in order to maintain his control of the voting rights, and wanting that ability to sell some of his shares without eroding those rights, that is on you. But in terms of the actual investing thesis, I don't think it changes the story at all. Otherwise, it just kind of closes out the chapter. And so for the details here, so the Class C stock will, I think, start trading this week, and They'll
Ooh,
actually
look
be
that up.
the official shares will be issued on April 7th to shareholders on record as of March 28th. And like I mentioned, they'll trade under UA.C.
Not coming up on Google Finance just yet.
Mm-hmm.
Oh, well. Anyway, okay, cool. All right, well, before we move on, I wanted to point out to our listeners that April is Financial Literacy Month, and in that spirit, we are giving away 10 books to 10 lucky winners that all revolve around this theme. These books include favorite financial picks from David Gardner, Morgan Housel, and many more. To enter to win, just go to podcast.fool.com and click on the yellow Super Podcast link at the top of the page. Entering your email address is at the bottom of the Super Podcast page. All right, so Vince, moving on to what I teased in the introduction to the show.
Mm-hmm.
I come into work this morning. I got my coffee. I got my Cheerios. I walk over to your desk, and you tell me that Amazon is now selling cable packages for Comcast.
Mm-hmm.
Not on my list of things that I expected today. Came out of the blue, right? I mean, this was just announced days ago, and you were showing me the page. It's a very attractive,
Well, I actually did not hear about this news till this morning, so I had to scramble myself a little bit to kind of gather all the details, and I saw the page for myself. But just to give our listeners a bit more of the background, so if you search Amazon Cable Store, you will it'll take you to the landing page, and you'll be able to see a lot of the details that we cover here and kind of how they some of the benefits of this partnership, but to boil it down for you, in a pretty unlikely tie-up with the cable industry, and considering the fact, Amazon could easily be considered one of these new content providers. Their streaming service is often viewed as one of the reasons why some cable companies have seen their subscriber losses, and they're kind of having to change their business model. But from a report in the Wall Street Journal, basically, Comcast CEO Ryan Roberts and then the head of the cable division, Neil Smith, they met with Jeff Bezos during a trip to Silicon Valley in 2015. So this partnership kind of started there, and then over the past year, they've ironed it out, and now it's launching officially. So Comcast's Xfinity service is the only partner that's currently available, but that is likely to change based on some other reports that I've seen. And this cable store allows you to shop these Comcast offerings, assuming it's available in your area. They'll ask for your zip code. You can see all the different packages, and there's also some other perks as well. Amazon, known for making the shopping process so simple. Think about Prime members and the fact that they tend to do a lot more buying from Amazon than non-Prime members, just because it's so easy. I think Comcast definitely sees the benefit there and what they can learn from the partnership, even just like reducing the number of clicks, for example, to close out the transaction to finalize it. And the thing is, for Amazon customers, there's a lot of perks to signing up through Amazon for Comcast service.
Gift cards?
So the ordering process is similar, right?
Right.
A lot of people are familiar with Amazon's checkout service and the reviews, and that's all here. And then also,
Amazon itself is extremely customer-centric. In
Exactly.
fact, they're willing to take financial losses in order to make the customer happy.
Exactly.
So, yeah.
And there's some tie-ins, think free Amazon gift cards that come with certain bundles. You get the full lineup of packages, tips on buying your own modem to save money. So again, that customer-centric nature. And another big thing that I think will actually be one of the bigger draws to sign up through Amazon is a dedicated customer service team. So Comcast is basically setting aside this special staff. So these team will be experts on a lot of the issues you get from billing to technical issues. And so instead of being potentially transferred all around, which I personally experienced trying to call Comcast when I have had issues, hopefully this one rep can handle everything, and it's much more streamlined experience when you're contacting them. But also, there's less wait time. Their goal is to get, if you call them, to answer within 60 seconds or less, which would be pretty impressive considering the times
That's
that
never
I've had
happened to
wait.
me.
Exactly.
I mean,
And a lot more flexibility just in terms of how they're able to reach out to you via phone, email, chat, social media, or just really broadening that. And again, I think some people have experienced like absurd or have had absurd experiences trying to cancel their service. Whereas here, these reps, I think it's something Amazon mentions, they're not paid by commission. If you call in and you want to cancel within 30 days of signing up for a contract, done deal. And if you don't have a term and you want to like downsize your plan, or you want to cancel because you're on a no-term contract, boom, again, none of that pushiness. So there's definitely some perks in terms if you are an Amazon customer signing up this way. Big picture though, I think ever since the Time Warner deal fell apart, Comcast their management team's been really vocal about how they're trying to invest more in their customer service. I think they're spending something along the lines of $300 million investing in more staff to handle customer service calls. They're doing things like allowing you to track where your technician is if you have a house call coming, and then if they're late, they'll credit you. If they're late even a single minute, they'll credit you $20 to your account, for example.
Oh, wow.
Trying to encourage this better service from the company. And then in terms of the pros and cons here, Bennett's for Amazon, it kind of solidifies its reputation, right, as being this one-stop shop for everything you need.
Well, not only that, but when I, first saw this, it occurred to me that this is just another value add for my Prime membership, because now, if and when I move, I'm currently a Comcast customer here in Alexandria because they have a little mini monopoly in this little enclave of southern DC metro area. But theoretically I could, when I move, use my Amazon Prime subscription to get in there and get new Comcast service or wherever. And
again, it should be a more fluid process signing up through the Amazon service. And the thing is, if this rollout's successful, it'll only reinforce for customers that Amazon can make even like a company with a pretty rough reputation have a very positive experience. So it's like that Amazon effect, like that magic that they have. And of course, they're not doing this for free. They earn a fee for each subscriber that signs up based on, again, the Wall Street Report they mentioned they had a source. So how much that is, we're not quite sure. Maybe we'll find out more about that in the future. But then on the Comcast side, they can learn a lot from this partnership. They're increasing their outlets for signing up new subscribers. They have some of that cross-promotional activity that we mentioned. They offer security services, for example, that might also get offered through Amazon at some point in the future. And I think this is just another step for them to be able to improve some of their public perception. And the pricing wise, it's the exact same. So you sign up through Comcast, and then you look at Amazon pricing. There's going to be no change there otherwise. So it's just really interesting. A very unlikely partnership I did not expect to see, and I'm kind of curious to if other companies join the flock. Charter, I think, is rumored in that report to also be talking to Amazon about adding their services. And you can, if you go to the site, which I highly encourage you to check it out, you can see that they're building in a way that they're preparing to have these other partners in addition to Xfinity. And so we'll see what the how many people take to this, and
that's awesome,
if it's successful for them.
Cool. Well, thanks for your thoughts, Vince.
Thanks, Sean.
Have a good day. And if you're a loyal listener and have questions or comments, we would love to hear from you. Just email us at industryfocus@fool.com. Again, that is industryfocus@fool.com. And as always, people in this program may have interests in the stocks that they talk about, and the Motley Fool may have formal recommendations for or against those stocks, so don't buy or sell anything based solely on what you hear on this program. For Vince and Shen, I'm Sean O'Reilly. Thanks for listening, and Fool on.